Hey everyone, I just wanted to do a quick introduction into supply and demand trading. What is it, how does it work, and what makes it different from basic retail trading? So, just to show you an example, in basic retail trading you had something called a support and a resistance. And many of us started trading this way. And you were basically taught that if this bottom zone holds, that you could probably look for a long, that if this top zone holds, you could probably look for a short, which in theory is true to some extent, but the real question lies in why. Why is it going to go up and why is it going to go down? There must be more to the way the market operates and moves that can tell me the why behind it should move up or down. So right now, if we were to look at this from a support and a resistance side of things, you'd be probably looking at forming a trade going long from this resistance down here, and from your resistance side, you'd be going short from the resistance. So long here, short here, but still not sure why. The way supply and demand looks at things is, let's pretend that we just don't even know what support and resistance is, and that we're looking at this logically. Supply and demand would show us the higher time frame. Okay, we're clearly very bearish. Alright, so obviously sells are higher probability, so we start looking at market structure. We're bearish on the 4 hour, we're bearish on the 15. Then we start looking at it in the sense of, where is the money lying? Well, we have money here, which is a form of liquidity or inducement, and you have sell-side liquidity down here. Now, the way smart money operates is we generally need liquidity from one side and we go the other way, or we take liquidity from that way and go this way. These things are called buy-side liquidity and sell-side liquidity. You sell down to it, or you buy up to it. So if I just look at this in a supply or demand side of things, the last sort of demand that was in control was in here. We did break that demand. Nothing came back to mitigate the initial flip zone. Depending how you map this, there's several different flip zones here. We have these sell to buy wicks, which are essentially just a lower time frame supply. And then we have the extreme here, which is the next supply we'd be looking at. Now, rather than looking at support and resistance, what if we were to look at the market as bearish or bullish? Where's the liquidity lying? And aside from that, where do we want to see the market go? Now, if all this money's stacked down here, is it safe to assume that this is actually not a resistance, or a support, I should say, and that it is actually quite the opposite? It is a target for us because we're bearish. So if we start looking at that, what do we need to actually move down here? Well, we need liquidity. Where are we going to get that liquidity? The nearest liquidity is here on the trend line and here. So with that being said, can we form a trade off one of these supplies? Absolutely. Why? Because we're bearish. And as of right now, the last high that put it in the low is actually, so you have a high, you have a low, you have a high, you have a low, you have a high. So we are unconfirmed bullish right now. Unconfirmed meaning that we actually haven't confirmed a bullish trend, and that this was likely just a liquidity grab to range wipe. And we tapped into this supply here. Maybe I can just draw a cleaner supply here. So ultimately we cleared out this range. This range here has been cleared out. So you look at this as a zone wipe, zone wipe. Ideally, we'd want to see a zone wipe here, but if we're being completely honest, your liquidity's here and here. If we take that, we have the fuel we need to run this slow. And ultimately that would be the simplest way to look at the market. Now, rather than looking at support and resistance and why can we take a trade there and why can't we, and you can see the reaction we got here. Now, if you were waiting for a basic support and resistance, you may have put a trade here, you may have put a trade there, and the biggest problem I have with it is you don't actually understand the why. So here, with supply and demand, we can explain the why, and we can kind of explain it to you quite simply is who's in control. So if we just look at this realistically, and let's clear that. So if we just look at this on the 4-hour, you can see how these zones react with each other. How every time we get to one of these zones, the zone gets respected, you get some sort of reaction, you come down, this zone now gets respected. So just by looking at this, with the demand's holding and the supply is breaking, we could say that demand is in control, and we basically keep on buying until demand loses control. On the flip side of things, it is the exact opposite. Who's in control? So here you have a last sort of demand. This area causes the break. That's your liquidity. You had one low, two lows. This is now a confirmed trend. So the expectation is that the market will likely continue on down. And we just follow the money. Smart money teaches you how to spot BFI footprints. That's banks and financial institutions. And ultimately, what are these BFI footprints? How do we find them? And the ultimate goal is to just be able to follow the money, trade in the direction that the banks and the financial institutions do. And that is the whole concept behind smart money, is we're just trying to identify their footprints and we're just trying to tag along for the ride. We're too small to make a difference, so our trading essentially doesn't matter, theirs does, and we want to be trading with them instead of against them as they move the markets. And you can see how long these impulses last. So if we look at this bullish impulse, it lasted for months. We look at the bearish impulse, well, it's still going right now. And the bearish impulse started around May sometime. Yeah, May. So we started in May, end of May. Previous to that, you can see how long the bearish impulse lasts. You can see how long the bullish impulse lasts. The purpose of all of this is just to identify that it's very expensive to change these trends. BFIs don't do it. And ultimately, the purpose of this course is to teach you to identify all these areas and all these things and how we can spot them. And ultimately, we just want to make it easy for you to get in these trades and spot them, rather than wondering if this is a support or a resistance, or this support became resistance and all that nonsense. And we all started trading with fibs and support and resistance and, channels and trend lines, and they work to some extent, but you'll never get the R's that you can get with the system. But even if you do get consistent with it, my biggest issue with it is you never understood the why. Why is the market moving that way? Why is the market coming back? Why is the market going down? We never actually learned the why, and that was my biggest issue with it. But hope you guys enjoy this course, and yeah, let's get started.